Have you ever wondered when a stock is significantly up pre-market, positive news, earnings, very similar to how Nvidia did when it had its earnings, but then it dropped and you're wondering what in the world is going on? Or have you ever seen a stock have negative sentiment or negative news, and the next thing you know, it pops right back up and you're like, what in the world is going on? I thought I was supposed to trade puts when I see red. I thought I was supposed to trade calls if there's positivity. All right, we're going to talk about it in today's video about this gap strategy and what that is and how you can use it to your advantage to gain easy money, in my opinion. If you don't have a chart in front of you, make sure you check out those charting videos here on the channel. Otherwise, thank you so much for being here. My name is Dr. B. If you're new here, welcome to the family. If you're a returning watcher, supporter of the channel, I appreciate you. You already know that. If you want to take it further in your own time, right? Take your time, get to trust the channel, understand what this is, try these things out for yourself and see if they work. And if you feel like, man, I just do not want to trade alone. I don't want to have to guess. I want to have feedback. I want to ask questions. I want to talk with other people that are in my situation, right? The first link is down below. Join Leverage University. That is our Discord community platform where we live trade. I give trade ideas, executions, voice. You can hear me talk about it, coaching, teaching, all those things. You can message me, right? And get feedback on your specific trades. If that sounds like you, if you want a community, the link is down below. Right now is our Black Friday sale. It ends at the end of this month. So make sure to take advantage of that at checkout. All right. Without further ado, that's all that. Let's jump into the teaching today. Per usual, if you've been here before, you already know how we do. All right. You already know how we do. So let's jump into it. If you've never been here, I like to go over with my Notion template here and give you the definitions, what it is we're talking about, and then we jump onto the charts. All right. So the gap strategy. Okay. What is it? A gap happens when a stock significantly opens higher or lower than the previous day's close. All right. So I'll give you an example. Let's use Nvidia. All right. Nvidia had positive earnings, and then you open up your Robinhood and you're like, oh my goodness, it's up $10 after hours. Right. I know that there's going to be a gap. Okay. At open. That means there is going to be a difference between where it opens in the morning and the previous day close before that earnings report. So that's about a $10 window that, in my opinion, is easy money. Easy money. And it's going to be different than a lot of beginners think, because a lot of times what happens is people wake up in the morning and they just think, oh man, Nvidia calls at open. Has that been you before? Right? And then it slams back down like it did this recent time. You're like, oh my goodness, what happened? Or you didn't take your call option out, or you didn't take your position out because you thought it was just going to continue. Right? So you turn a green trade or a potential green trade in easy money into a red trade, right? Not understanding, man, this is rigged. And then the stock market's rigged. No, it's not. There's a gap, right? And you're going to see it on the charts shortly. All right. And I'm passionate about this because if any of my Leverage University members know, or any of my seasoned investors and traders know, this is easy money, right? This is how big money traps small retail investors, right? Traps beginner traders. Not knowing what's going on, not having a chart in front of them, not knowing that there's gaps at open, right? And similarly to the downside, okay? So we know that Meta, right, had decent earnings, but gapped down on its earnings, right? Big gap, like opened in the morning, it's like a Meta's down $80, right? There's going to be a gap back to the upside, right? So I'm going to talk about the difference between the two, because a lot of times the gap down, in my opinion, is a lot tougher, because when things are negative, it can just continue and continue and continue. That's what we call a gap and go, right? A lot of times when things are positive, people are willing to take their profits so you can get that pullback very quickly, right? So I like to be, as I like to say, more patient on the gap downs, because you don't know where a bottom is. It can just continue. But a gap up, I know that's going to be overextended. People are going to want to take their profits and their good money, and then eventually it rolls back down. Okay. So how does this strategy work? Identify the gap at market open, which we'll talk about. Price opens above or below yesterday's close. So I can just simply look at my Robinhood or look at my Webull platform on my phone and wake up in the morning. It's like, oh, we're up 2, 3, 4%. There's going to be a gap at open. Oh, we're down 2, 3, 4%. Okay, there's gonna be a gap at open back to the upside. Okay, so wait for confirmation, and then we trade normally how we trade. So if there's a level approaching and there's a gap below, I can reject that with puts, right? So I can enter puts when everyone is positive, 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 positive. I see exhaustion at the top in resistance, trade puts back down. That's what we did in Leverage University with NVIDIA, okay? I was like, oh, this is going to be easy money. We just didn't hold long enough. Just didn't hold long enough because, it was just so drastic that was 1,000% trade day, right? When NVIDIA had great earnings, right? So the gaps are amazing. That's why with earnings, it's better to always trade post earnings, because on big tech stocks, a lot of times you'll get that gap. So it's better, in my opinion, to trade post earnings, because everyone thinks, man, I can just enter before and it's a lotto and maybe I win big, but we'll talk about that in another video. All right. Wait for confirmation, trade towards the gap fill or towards the fill. Okay. Price will gravitate towards it. Sometimes it'll stop right in the middle of it. Sometimes it'll stop right at it, right? Sometimes it'll continue all the way through it. All right. Strengths, gap fills frequently due to profit taking, right? That's what I just talked about. So using the example of NVIDIA and their earnings, everyone that was already in NVIDIA before their earnings took their profit. And that's why it dropped, and it dropped a little bit more drastically, in my opinion, than it needed to, but it dropped, right? People were taking profits. People were liquidating, okay? And also it has a market rebalance. Gaps are not normal for stocks to have all this news after hours and things to happen and, bad news, positive news, earnings. Like, that's not a normal way for a stock to move. So if it jumps up, after hours, eventually it's got to pull back and fill that gap to rebalance. Okay. Weaknesses, strong news driven gaps may not fill immediately. So NVIDIA could have done a gap and go. So that gap just continues. I mean, that momentum just continues higher, and then it maybe fills over the next week or something like that. Okay. It can be dangerous also that you assume every gap is going to get filled. Very similar. And I'll show you on AMD, right? There's a gap on AMD right now, but it's not going and filling that gap. It's bouncing back up. Okay. Entries, enter when price rejects the direction of the gap. Use volume confirmation, VWAP, all those things we've talked about. If you haven't watched my VWAP and 9 EMA video, go check that out. All right. First target is always middle of the gap. I like to trim when it gets to the middle of the gap, the first push into it, and then leave runners for the remainder of the gap. Stop losses, keeping them profit. Okay. If all that sounds like a mouthful to you, take a deep breath. We're about to jump on the charts. Okay. And I want to get you acclimated to what this looks like now. So now all this wordage and you're trying to visualize it, you've never seen it, we'll jump on the charts. All right. Cool. So I'm on my Webull platform, and the reason I do like Webull because it shows the gaps. Okay. So let me show you what it looks like on AMD first, so you can understand what a gap looks like. All right. Let's here, take off this, take off the after hours. Okay. And let's go to a daily. Okay. And I'm going to get rid of everything on here. And I want you to pay attention while I'm doing this to that light gray area. Okay. So on Webull, what I can do is right click, chart settings, go to chart display, and show 5 gaps. All right. So show 5 gaps. That just shows as many gaps as possible. Right. I do not believe Robinhood allows you to show the gaps, but you can still see this gap on Robinhood. So if you're on Robinhood Legend, okay, if you're on just your phone and you're looking at the line charts, you're not going to see the gaps. Okay. That's why I recommend either knowing what that is, or also making sure you set your desktop chart up, or your chart on your phone is fine too. Okay. Just make sure you have some type of chart here so you can see what's in front of you, right? So you don't get trapped, okay? Not knowing where price is going. So look at this gap that was created from that positive news that AMD had back at the beginning of October, okay? AMD had some positive news. You woke up in the morning, AMD went from 165 all the way up to 227. That is not normal, all right? So you can see that AMD people profit took. It tried to come back and start filling that gap, but stopped. Okay. And then it just continued, held price. But eventually it broke trend right here and started working its way back down to try to fill the remainder of this gap. Okay. So if this gap fully fills on AMD, which most likely it will, even if it goes back higher and rolls back over, right? That tells me that AMD will most likely be back underneath 160, 150, 160, right? Because when that gap fills, look where the bottom of the gap is, 170. Look where the support is on AMD, 152. So this movement was not a normal movement for the stock to just have positive news out of nowhere and just gap up, right? That's not normal, but it happens. So like I said before, the rebalancing, it will come back eventually, rebalance, right? And just because it's pulling back does not mean it gives you a better buying opportunity. Then we can go higher again, right? So positive stocks, or excuse me, blue chip companies, a lot of semiconductors, a lot of big tech will have these news events, right? Which is why sometimes it's very difficult to swing trade, because you're waiting on this entry. I will not forget, as far as an option contract, for any of my Leverage University members, we were looking at this bull flag literally the day before it popped, and I was like, I'm entering this in the morning. I'm waiting for a breakout of 165. I'm entering, guys. Target back up to this 185 level. And I wake up in the morning and it's already at 227. Right. So now I'm like, okay, my gap fill strategy, got to see if I can get a reject and play this gap back down, which I wasn't trying to do. I wasn't trying to play against a strong stock. So it gapped and went. I got a little scalp right there, right off open. And that's what we're talking about, is easy money. Okay. So let me show you here on AMD when that gap first happened. Okay, right here. Okay. You wake up in the morning and AMD is all the way up here. Look at the RSI. We've talked about that. I made a video on RSI and MACD. It went to 226, okay, immediately. So it opens up here and then pulls back immediately, roughly, this is on a 5-minute chart. So that day it pulls all the way back to 205. So when we say easy money, I know that there's going to be some profit taking, most likely at open. Once I get my signal, there's the confirmation, and then I enter roughly at 220 and then take it down on puts. So just because there was positive news does not mean you missed the trade, right? Because now I know when we wake up in the morning, there's going to be a large gap that could be an opportunity for puts back down, right? Which psychologically for people doesn't make sense, because they're like, it's positive news. Why wouldn't I trade calls? Why wouldn't I? Yeah, you can, but you missed the move. So now the trade is more risk to reward back to the downside for a pullback, right? Now, Brian, do you always have to trade, against the trend? No. If you've been taught, or if you're the person that likes to trade with the trend, then you would want to not chase gap ups. You want to wait for them to pull back, as far as once you find a base. And this wasn't, this was a base to start basing at 205, 207, right? And then take that back up. Okay. So I never chase gap ups and I never chase gap downs, right? You can see the gap right here, gapped up first thing in the morning. Look at that, pull back, right? So I can either just trade puts right back down immediately, or just wait for it to pull. It's positive news, wait for a support, and then rotate it back up. Okay. Now here was a gap down. Okay. You see a couple gap downs. Wake up in the morning, it's negative. Something happened, right? It just gapped down for no reason. There's a gap. There it is, right back up. Okay. Look right here again on AMD. Gap down. Look immediately. Found a bottom. Found your confirmation on a 5-minute, right? Enter right there on that reclaim of 240. Take it back up. Fill the gap. There's your $7, $8 move. Easy money. Okay. There's another small gap right there. Gap down there. Right. Now you can see here that some gaps do not fill immediately, right? It will just keep going and then keep going and then try again and just keep going. Right. So that's why it's important to still trade your chart, still trade the levels, but you want to be mindful that, again, don't assume that that gap is going to get filled immediately. You want to trade through it, wait for confirmation. And if it continues, then cool. You can leave runners and you got your gap fill. But if momentum's not in your favor and it's not going to fill, then don't worry about it. Look at all these gaps that are created. You see that one right there on the 10th. Look at my bottom of my chart, the 10th, 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 10th. And then the 11th, the next day, pulls back, fills the gap. Right? Look right here. Next day, gaps up, another positive news data. Okay, there's the 12th. And nope, profit taking, 12th, 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 13th, pulls back, fills the gap. Okay, so gaps are beautiful in my opinion once you understand them. And today was another one. We entered this one to perfection. Okay, so look at AMD right here. Gap down with that negative false news with Google and Meta and whatever they were talking about, but it gapped down. So when people wake up in the morning, if you had calls, that's why it's a day trader's market right now, in my opinion, at the time of this recording, which is 11/26/2025, right? Because every day is something different. So if you try to swing calls and you wake up in the morning, it's down, and then you try to, oh man, enter puts, and then next thing you know, it's up next morning, right? So it's back and forth and back and forth. So I like to trim my profits, take my profits, right? Because you don't know what news is going to come out the next day, right? So look at this. AMD filled the gap. We caught this trade, beautiful 300% trade. I entered right there. I knew there was a gap right here. It was trading into the gap into close, leave a runner, probably going to fill in the next day. It filled. Now it's back to the highs. There's a little gap that was left right here. What do you think AMD is probably going to come back to? Most likely going to try to fill that gap and come all the way back down. Right. So I think that's the frustrating part, is the volatility for beginners. Is like, I don't know what direction this thing is going. Whatever stock it is, it could be SPY, QQQ, IWM. It could be your favorite stock. It could be Tesla, right? Let's look at Tesla, because a lot of people, watch Tesla and look at it. And it also helps you see that when everyone is leaning towards a certain way, and I also see unfilled gaps, okay? I see unfilled gaps. A lot of times I'm like, ooh, that could be really good. Look at Tesla. Whenever it gets to wherever it wants to go to the top here, it can get all the way back up to 450. It can get all the way back up to 460. It can get all the way back up into here. But I know there's thin structure and there's little gaps that are unfilled back here. So while everyone is getting horned up that Tesla's going to go all the way back up here, right? I know that there's unfilled gaps and eventually there. Okay. Now, what's going on with Tesla? Well, there's your support and there's some unfilled gaps right there. So there's thin structure. That simply means straight up move. There's really no volume on a straight up move, and it tried to fill it, couldn't fill it immediately. And then eventually it'll go where it wants to go and come back and fill those gaps. Okay. So it is a highly advantageous skill to understand this, because it allows you to be more patient, right? While everyone's chasing the highs and chasing the highs and chasing the highs and chasing the highs, and you see gaps, right? Look at Meta, okay? I'll give you a few more examples here. Why I personally think that Meta was a great pickup, and you should have picked up some shares, either METU, the leveraged ETF of Meta, the cheaper version, right? If you didn't know about that, some people just don't invest because they don't have the money, but here's METU. It's $30, right? It follows Meta exactly to a T. When Meta was at the highs, this was at $50, and now this METU is at 30. Okay. So on Meta, there are a couple of unfilled gaps. Look at this. Let's zoom out. So Meta, in my opinion, I like a buy zone of 550 to 500. Why? Because that would be these gaps that will be fully filled, and I can entrust that Meta will. It doesn't say don't pick it up right here, because that's a great buy zone at 600, right? That's support. But eventually Meta can come all the way back up here and come all the way back up here and then roll back over, right? And not fill that gap immediately and want to fill these and then double bottom and then go like that. Okay. So it doesn't happen when you want it to, but it allows me to see a better view of being patient, right? So this will be buy zone 1, right? So I might put buy zone 1 for Meta shares or whatever, leaps or swing, right? Maybe right here at 550 would be buy zone 2. Okay. Fill that first gap right there. Fill that one down to 550, 545. And then ultimately the load up zone, or where you can trust it a little bit more, is it fills all those gaps. And there's your final buy zone right there. Okay. Does everyone see that? right? So as Meta, because you'll look at it and you're like, Meta's going crazy, but it's gapping up and gapping up and gapping up on very low volume. That's a nice little dead cat bounce off of that 600 level. It's already dropped significantly, but it does not mean Meta is back yet fully. It does not mean don't pick up shares, but it does mean that, hey, like this could not fill this gap all the way back up here and still weak and then roll back over, right? And there's gaps below. Okay. And then I'm like, thank you. It's filling those gaps. Bring it lower, bring it lower, bring it lower, bring it lower. Right. Now, where would you get confident on Meta that, it's going to be back is really back above. I turn on moving averages here. Right. These are just tools, right? Back above this daily 200. Anytime a stock is below this daily 200 right there. Right. So it is still weak. So this is a recovery move back in the daily 200, which is 670 and could still come back down. So Meta really needs to get back above that daily 200, squeeze back up here, hold, and then start filling and working on that gap. All right. Because there are gaps below. Cool. So this is a long-term investor view or a bigger view for anyone that's wondering, where do I pick up shares? Where's the bottom? Where's the biggest dip? Right. And that could really help anyone out to understand that there's still potential room back to the downside. All right. Let's jump into crypto really quick. Okay. And I do believe there are some gaps on Bitcoin, if I wasn't mistaken. Maybe not. Nope. Cool. Trying to think of anything else that has gaps. Let's look at some of the crypto names, like just say Strategy and Coinbase. Okay. Let me take all this stuff off. And I want you to look here that there were some unfilled gaps on Strategy. They were all the way back down here to 140. You see that little small sliver of a line right there. It is very small. That's why sometimes these highlights do help, right? So I do check for gaps just in case, right? Just in case that Strategy gets below this 170, trickles under here, there's room back down to 140, right? 120, right? Let's look at Coinbase. Ooh, this is a good one. This is a good one. So you see Coinbase is working on this gap right here. So while everyone was horned up at $500, it's pulling back and wondering where's a bottom on this thing, right? So once Coinbase got underneath 300, right, it's trying to work on this gap. So it came down into it, started filling a little bit, could pop back up to 280, 290, and then still come back underneath $200, right? Fill those gaps fully. And then we got Coinbase back at 150, 140, 130, and those gaps are filled. Then we can ideally, and I'm just saying an ideally scenario, work back the gaps back to the upside. Okay. So I can go just down the line of gaps and I think people are enjoying this. Hopefully I'm feeling you through the screen. I want you to see the S&P 500. Why individuals are kind of like, how do you know which way it's going? Up, down, up, down, up, down. Is because a lot of times when it's gapping up multiple times, it's got unfilled gaps below. So I'll give you a little hint going into December, going into the rate cut decision, going into the end of the year, is that while everyone is talking about all-time highs, which we can get, if we get a push above here, well, we've got unfilled little slivers of gaps back down to the downside. So we could do that. Look at this. As it was going up, it left unfilled gaps. You see that right there? So as everyone was like, man, all-time highs, all-time highs, all-time highs. Well, there was an unfilled gap right there. And when did that fill? About 2 days later. And it rolled all the way back down, gave the whole move back, right? So here's the gap from NVIDIA earnings, where everyone was like, oh my goodness, look at that gap. So it blasted right through the gap, came back up. We had a small gap up right there, another gap up right here. And now we're back in resistance, right? So what I want to see is I want to see us ideally fill this little sliver of gap right here and see how we react, right? See that little gray area right there? Fill this. Bam. Okay. Now, does it always happen that way? No, not necessarily, but I'm always a little bit more on the caution side when we gap up and gap up and gap up and gap up and gap up. Google. Beautiful gaps right now, in my opinion. Gap up, gap up, gap up. And then we start getting a little exhausted up here. And eventually that's when you get where it's going to be a catalyst or a news event. The stock is eventually going to start working its way through these gaps. And that's when you get something like this, right? And it doesn't look like that immediately. It'll be stair-stepping its way down, working on the first gap. So that tells me that Google most likely will be back down. Oh my goodness, look at all these. Just look at all that. So as Google has had an amazing, amazing year, right? There might be a rotation from Google as it continues to gap up and maybe wants to go all the way to 350 and whatnot. But eventually it will start working on these gaps. Okay. So the closer it is to the first gap, I know that I can potentially trade that back to the downside as I see exhaustion. And you can see that today right there, right there. There is an engulfing candle. There's a lower high and it's starting to get a little exhausted right here. Start working on that gap. Okay. So that tells me that Google could potentially be right back to 306, 305, 300, right? Which I'll be looking for that coming into December months. All right. Well, I can keep going on and on. I will stop right there. Hopefully this helped you out understanding that how to use these gaps to your advantage. If you have Webull, I just showed you how to do that. Right click, chart settings, turn on 5 gaps. If you have Robinhood Legend, right, you can see the gaps on there. Just go to turn off your after hours. So turn off the after hours, right? So you can see the clear picture without the after hours and you will see the gaps present. All right. Let me know down in the comments if you use this strategy to your advantage. If this is new to you, also let me know like, hey, Brian, I didn't know about this. This helps a lot. Now I know why things drop or pop really quickly off open because there was a gap there that needs to be filled. All right. Peace, love, and blessings to you. Until next time, thank y'all so much. Y'all have a happy and blessed Thanksgiving holiday and weekend. And I will see y'all inside of Leverage University for our live trading started off the month of November. Welcome to the family. Talk to y'all soon. Bye-bye.